Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our guests on the show. Joining us today are Vivek Mavani, who's an independent investment advisor, and T.S. Harihar of HRBV Client Solutions, who join me on the show. Many thanks to both of my guests. Today on the show, we discussed Reliance Infra. The entire ADAG group, along with its subsidiary Reliance Power, came out with its numbers, which actually saw the largest ever quarterly loss. The entire pack is not doing well. Reliance Infra, on its part, has also not announced its result. So we'll be speaking to our guest on what's gone wrong with Reliance Infra and what should one do with the ADAG group. Dewan Housing is another company in which we want to ask our guest whether is it the right time to start investing in this company or no. So Dewan Housing of late has been under rather pressure given the fact that the bond rating has been put at a D rating. Astral Poly has seen a good up move in the last 3 months. We discussed the stock as well as with our analysts what exactly happens there. And since the market is looking like it's headed to top out, we ask our analyst one stock they believe is overvalued, or if it's in the FNO, they would like to short at these levels so that can be gotten at lower levels. So these are the stocks that we will discuss today in Hot Money. Let's start with the first one, and that is the ADAG group, in particular Reliance Infra and Reliance Power. Now, Reliance Infra is down 11%. The reason is extremely weak set of numbers from Reliance Power. Reliance Infra owns 33% stake in Reliance Power and is the parent company. And Reliance Infra itself has not declared its numbers. They're saying that they were waiting for Reliance Power to come out with its numbers. Now that they have on June 14th is where Reliance Infra will declare the numbers. So we ask our guest what's happening in these companies, whether at 66 does it make any sense to buy Reliance Infra or just stay away from it. Hari, would you buy Reliance Infra, Reliance Power, or pretty much anything to do with the ADAG group?
No, I think for me the overall group is best avoided, be it Infra, be it Capital, or even be it Reliance Power. I think what they have done in Reliance Power is probably against all the norms of corporate governance. Normally you take an impairment in the year or the next year, not 7 years late. So I think that's raises a very, very big question mark as far as the corporate governance standards are concerned. Number two, if you look at Reliance Infra, I think apart from the fact that they've already hived off the power unit to Adani, I think what really matters in Reliance Infra is that this is a stock that corrected 80% from the last 1 year, despite announcing fairly good results in the Q4 of the previous year. So I think there is a big issue of trust, and I don't think anybody is even trusting any of the numbers that this group is putting out. So I think Reliance Infra at 67 or 70 now, but I think even probably 60% lower, I don't think I would be too keen to go in and buy the stock. So for me, this entire group is a strict avoid.
So basically, I think the results were deferred. This from 29th to almost 7th, they said they will. On the 7th also, both Reliance Infra and Reliance Power didn't declare. Reliance Power declared it on the 8th, and they had a host of auditor qualifications, host of impairment. Are you sensing that probably something like this could happen in Reliance Infra also? Is that something that the street should be aware of?
I think what is being heard on the street is that there are serious audit objections. So probably the auditors, refuse to sign the report without very serious objections, which is why I think the results are getting delayed. So we have to really wait it out. But I think what has happened in the case of Reliance Power, to me, doesn't send a good signal for the group as a whole. So as I said, it's more a question of group trust. Be it any company, from RCom to RCap to any of the group companies, it's more an issue of group trust that is going to work against Reliance.
What's your sense on ADAG, especially? We'll talk about the others later, but Reliance Power and Reliance Infra, were you surprised at the numbers that came out? Were you surprised at the auditor qualification? And are you expecting something equally bad in Reliance Infra when it comes out with its numbers?
Well, quite likely that something's very seriously negative is just around the corner in Reliance Infra as well. If Reliance Power was, I would say, a preview to what is happening, and as you mentioned that Reliance Infra holds substantial part of Reliance Power. So in the process of consolidation, obviously the losses of Reliance Power are going to reflect in Reliance Infra numbers also. But standalone Reliance Infra, or even, since we are talking of the group, Reliance Infra and Reliance Capital had and continues to have some valuable assets, and one is tempted to believe that the stake sales or sale of businesses that Mr. Anil Ambani has started doing over the last 12 to 18 months should have sorted out the problems to a large extent. I mean, Reliance Infra sold off the Mumbai power distribution business for 18,000 crores to Adani, which would have eased off some debt burden on Reliance Infra. Reliance Capital has sold off the radio business for 1,200 crores, and Reliance Nippon Life, the asset management, the mutual fund business, where another 5,000, roughly about 5,000 crores of inflow is coming in. So almost like 6,500 crores coming in. Reliance Capital, 18,000 crores has already come in Reliance Infra, plus there are a few other assets on the block, and yet if the problem doesn't get sorted, and mind you, just to take an example, Reliance Capital, the market cap today is less than 2,500 crores with expected cash inflow of 6,000 crores probably, which will come in the next month or two. So I mean, it seems an absurd situation. So what the market seems to suggest is that there is absolutely no trust in ADAG. We don't know whether the money is there at all, whether the money is actually coming. If the money is coming, where is it going to go? I mean, so it raises more questions than provides answers. And at this point of time, I think the market, to get the confidence in the group, needs more answers than more questions being raised every day. So although I'm tempted to be bullish simply by the sheer size of the cash inflows by way of asset sales and stake sales and some more which is in the pipeline, it's just that there's this severe trust deficit creating a negative sentiment, sort of makes me also cautious. Otherwise, I will go on, I mean, to say most people in the market would hide that, but I have on this very program been bullish on Reliance Capital maybe a couple of times in the last 1 year, proved wrong, lost money myself also and on behalf of clients. But yes, there seems to be a serious problem which market doesn't seem to get answers to get that confidence back.
So should they totally avoid ADAG group till the time there is clarity, till the time the management comes in, comes out clean in terms of knowing what is going on, whether say that all these impairments will continue or no? What's your sense then?
Well, if there was any time that the management needed to come out and when I say management, Mr. Anil Ambani himself has to do it, not the CFO or the CEO or the head of operations of the business. I mean, Mr. Anil Ambani himself has to come out and make that thumping statement to have that trust and confidence back in the group. I mean, that is what is required. That yes, asset sales and stake sales have happened, and for whatever is required, he is committed to sorting out the problem. I mean, the very fact that so far there's no statement from the company, one is left to, there's more guesswork and more questions that raise. As I said, I mean, he has to come out and just clarify all of these things.
Okay, yeah, Hari, before I move on, just a word like Vivek was saying that Reliance Capital, obviously a market cap in less than 2,000 crores with high expectation of cash flows. Is that something that you would consider as an investment opportunity, or that is also something you would avoid?
No, I think what the market value is suggesting is that most of the funds are already committed to to be paid out. So as far as the company is concerned, I think there is going to be nothing left as far as the shareholders are concerned. So I think that is what probably the stock price of Reliance Capital reflects. I don't know exactly what's going to happen, but let's not forget that at one point of time, RCAP had the highest AUM in the Indian mutual fund industry. Of course, it's I think 4th or 5th now, but that's a different issue altogether. So for a company from that level to come down to a level where nobody wants to buy the stock, I think there is surely a serious trust deficit. And as you know, the basic issue is trust. And Vivek was suggesting about Anil Ambani coming in and giving a statement. The problem is Anil Ambani is the problem. The whole market doesn't trust Anil Ambani. That is the whole problem. So I think even if he comes and gives a statement, there is not going to be any, I would say, fresh impetus given to the trust deficit. I think it's going to remain the same. So that is the whole problem. In my view, what is going to happen is they've got to show that asset sales are being done and assets are being utilized to repay debt. I think unless that happens, I don't think the trust deficit is going to go.
Okay, so that's the verdict on the ADAG group. Again, another company which obviously has lost the trust of investors, has lost the trust of mutual funds, and that actually also needs to come out clean and start showing performance is Dewan Housing. All the way from levels of in excess of 650, it's trading at 87. So a huge amount of money has been lost along the way. It's actually down 85% in the last 12 months. So it's lost majority of the value. And remember, this is not some stock in which, and there are a lot of HNIs, large scale HNIs, which have invested in this stock and they have lost money. Vivek, Dewan Housing, you think everything is over here, or you believe that what they're doing is in the right frame and probably the stock should bounce back?
Well, I'm at pains to find reasons as to why the stock should bounce back. I mean, on several market-related WhatsApp groups or even in the ecosystem that I am part of, a lot of people are tempted to buy. Oh, it's already fallen 80% or 90% from the top. How much more can it go? Well, it can lose another 90%, and we have seen enough examples as to why it cannot happen. Number one. Important is in this whole problem, I'm going to take a couple of minutes extra to address this whole problem in the financial sector. Managements which have been caught pants down, and I'm actually using the word caught pants down in corporate wrongdoing in terms of disclosures, in terms of governance practices, in terms of whole lot of things that they have been doing and trying to hide over the years, applies for some of the private banks, also more so for NBFCs, should just be avoided with a barge pole, because you don't know what kind of negative surprises they are going to keep delivering. I mean, there are enough skeletons tumbling out of the cupboard, but you still don't know how many more such closets and how many more skeletons still remain. One can really not be sure. And here, I mean, in case of, and just a diametrically opposite to Anil Ambani, Dewan Housing has been probably twice a week being on the media, clarifying on everything and holding regular conference calls, and saying, oh, we are, I mean, as innocent as angels. But the point is not about the technicalities about a default, not about the technicalities about related party transactions and so on and so forth, which are not disclosed earlier. It is about the intent, and that is what the market is worried about, and that is where the trust deficit lies. It is not about following the law in letter, but more so in spirit, in terms of the intent is in the right direction. Now, in case of Dewan Housing, what would have been a month back a liquidity issue in terms of a slight mismatch in their cash flows, little of asset liability mismatch, which they had admitted to earlier also, now becomes a solvency issue. And the reason is, last week they have been downgraded to default grade. Their liquidity issue stemmed from the origin where their short-term loans or CPs and NCDs could not be rolled over in time, which is what led to the default. So it was probably only a liquidity issue. If that refinancing or refunding had happened on time, this problem would not have been so severe. But now that they're at a default grade, nobody, even with the correct intentions, will be able to put in the money. So not a single NBFC, mutual fund or a bank or anybody will be able to invest in Dewan Housing, even if they want to. The key thing is, even if they want to, anyway, nobody wants to. So this issue about the asset liability mismatch only gets worse, that all their funding sources, all their cash inflows have just been choked, while the commitments continue to remain month after month in terms of interest payments, in terms of repayments on the outstanding liabilities, and so on and so forth. And on the asset side, whatever they need to receive from the loans that they have given out still remains a question mark, because now even the quality of the book is at question. So a liquidity problem getting into a solvency problem. Management has repeatedly made noises. They have got term sheets from BlackRock and some other foreign investors for sale of parts of their businesses or parts of their loan book. Okay. Well, whenever that happens, it happens. But to get this company back requires a very large equity infusion, very large capital infusion, even by debt, on very benign terms. The key thing is benign terms, because if they have new funding coming in at 15-16%, it doesn't help, because the company is not going to be profitable anytime in future.
Hari, what's your sense? You trust the management now, you trust this company at any point, even at lower levels of this level. Does it warrant any kind of putting in money in this company?
No, I don't think so. See, because a couple of things. One is a very short-term view on Dewan Housing, and another is a slightly medium to long-term view. Let's look at the short-term view. I think this month the company is already defaulted on 960 crores of interest payment and debit, so that's already done. They've already been degraded down to D status, which means every mutual fund holding this bonds has to write off 75% mandatorily. So that is already done. Now in the next month they have got 2,200 crores of inflows and 6,600 crores of committed outflows. So that is a gap of 4,400 crores. Now there is no way I think they are going to be able to raise that kind of cash. So that will be another default next month. Now the big question is, what is happening in the secondary market. There is a lot of deals happening in the secondary market for Dewan Housing bonds, but they're happening at ridiculous yields. Now, if you take that benchmark as yields, I don't think Dewan Housing can ever borrow money in the market at less than 16%. And if Dewan Housing borrows money at that rate, there is no way they're ever going to be profitable, I think, in the next 20 years. So as far as I'm concerned, there is no point infusing equity. So I think whether it is BlackRock or whoever it is, I don't think anybody in their right senses is ever going to infuse equity into this company. So equity infusion is out. Debt at a D grade, who is going to give you debt? So I think even debt is more or less out. The only thing that I see is probably whatever are the good portfolios, again, ring fence and either securitize it or sell it off to other home loan companies. That is the only possibility, and that could probably, close out the entire business with a haircut of about 30-35%. I think that is probably the best that you can expect from this company. But as far as I'm concerned, Dewan Housing on practical purposes is as good as over.
Yeah, so basically my only follow-up question here is that, no one should do a fresh investment. If someone who is stuck, let's say he bought it 200, 300, 400, 500, 600, you use up almost 650, should they just write it off, or what would you advise if one of your clients says this?
I mean, see, you can always wait for a bounce, but I think it's really what I call a shot in the dark,
Yeah.
So,
like he pointed out, there are companies that fall 80%, and there's a high probability that from that level they will become zero or almost single digit.
Yeah.
And we've seen it happen numbers of times.
Infosys fell 92% in 2001, and then it recovered everything and more. But Infosys is Infosys, it's not Infosys. So, it's hard to take those kind of analogies. But I think this company has a serious problem, and now I think the SFIO is investigating, the ED is investigating that money has been laundered out. Now, these kind of things don't augur well for the company. So now if any of these things turns out to be true, it only means that promoters are taking their cash out and they don't give a damn what happens to the company. So what is there in it for the shareholders? I think nothing. So if you have bought at 200, you're getting 85 or 87, whatever is the price, I think you should take the price and go out.
Okay, that's the view that's coming in on Dewan Housing. The next stock we want to talk about is Astral Poly. One of the companies which has managed to actually buck the trend. It's done fairly well for itself over the past few days. Trading at 1300, it's up almost 11% in the last 3 months. Leave apart Nifty. Nifty is done well, but the mid-cap space has been actually battered. But yeah, decent returns in 3 months, 11%. Astral Poly, do you like the company, Hari?
A good company. I'm only worried about the price because if you look at valuations, I think for a company that is largely into industrial plumbing solutions, I think 105 times P is a little too steeply valued. So, I'm not sure. I know that even if you look at the low and high prices of the last 1 month, the stock is quoting actually closer to the, the 52-week high. So, definitely there seems to be a momentum in favor of the stock. But if I look at the industrial plumbing solutions and if I look at the P of 105 or 110, I think it just looks too steeply priced to me. So, yes, we like the business model, they have a good order book, but I think at these valuations you should probably wait for a correction and then buy. We like the stock, but I think the price doesn't seem to be too right at this point.
But what's your sense on the stock company valuation and the valuation, of course? Is it something that is investment grade?
Well, it certainly is investment grade, except that the price is not right. So in that sense, I'll agree with Hari, and I'll add a few more points. So my sense is Astral over the last 15 years has done a stupendous job. Hats off to the management, compliments to the management of having delivered 25% earnings growth for like 15 years. It's a zero debt company, delivered 18% return on capital, return on equity, and diversified from a single product which was CPVC pipes to today entire bouquet of products for the entire plumbing segment, with probably as many as more than 2,000 SKUs or stock keeping units, as they call it in parlance. So my sense is the best part in the as far as the growth story in Astral, I think, is behind it, number one. Now what we have is increased competition from deep-pocketed players who are already, so 10 years ago Astral was probably one of the couple of players doing CPVC pipes. Today you have more than a dozen or close to 2 dozen, including small and regional players. Each of their competitors is significantly larger and deep-pocketed, and importantly, all of them are expanding capacities aggressively. So whether it's Prince Pipes, Ashirwad Pipes, both of which are going to come out with IPOs very soon, Supreme Industries, Phenolix Industries, or even HSIL, which is Hindustan Sanitary Ware, or Hyderabad Industries, even those are the companies who have got into this, and everybody is aggressively expanding capacity, such that in the next 2 years, the announced capacity expansion in CPVC pipes and fittings, which is the mainstay of Astral, the industry capacity would probably have increased by 35 to 40%. Demand growth is also in low double digits, maybe 10, 12%, 13% industry growth rate, but there's no way this 40% increase in supply over the next 2 years, or at least increase in capacity, is going to put pressure on realizations, pressure on margins for everybody. Astral included. That's number one. Number two, the too much of dependence on the raw material. So their in expansion and gross margins is to a large extent dependent on the resin prices, which is a global commodity. Now, so far in the last 10 years, they had the pricing power, but as I mentioned, with increased competition, maybe even the pricing power is going to go away. So a very fine company, a very good track record, but from the valuations point of view on a consolidated basis, it's about, if I'm not mistaken, about 50 times 1 year forward earnings. And if I were to look at other building materials companies, Astral does not probably be there in terms of an investment opportunity. Probably the paint companies or some of the other tiles companies, for example, which I can compare it to in terms of building materials, probably have a better risk-reward ratio from a valuation point of view than Astral.
Okay, that's the view. And finally, since the market looks a little wobbly, or probably it's at the peak, is it the right time to start, exiting some counters, or if it's in the F&O side, shorting some counters, probably on valuation mismatch or anything on that sort? What's your sense, Vivek? Anything that looks that it could correct?
Well, there are a whole lot of, if we were to get into the discussions in terms of where are the downside risks, maybe till evening we could still be discussing and not, I would not have been exhausted with my list, but at least two stocks come to my mind. One is Jet Airways. You would recollect on 25th March, we had exactly discussed top shorting ideas, and I had mentioned of Jet Airways, which was then about 225, 230. It's at least 40-45% lower from there. And my sense is, the question I keep asking myself, why is this stock not yet gone down to zero? Airline which is defunct, the promoter has abandoned it. It's majorly owned by the banks who hold all the liabilities of the company. Nobody seems to be interested in taking it over unless there are some serious concessions given, which obviously banks are going to find it difficult to accept. Etihad, which has 25 or 26% stake, is in no mood. Probably they have no ability also, because they are also financially constrained in their home country. They have no ability or even the willingness to infuse any capital and take over the management of Jet Airways. In the sense, they are the owners of the aircraft and the leasers have also taken away the aircraft. The parking slots at the airport have been given away to the other airlines. The staff has been abandoned. So what remains in the airline is what one wonders. Nothing actually, except the name. Nothing remains, and I don't think the name is worth 1,500 crores that the market cap is even today. So my sense is Jet Airways, I would continue with that shorting idea on Jet Airways. The other is a slightly longer term short, but Yes Bank, which I think Yes Bank is also an exit on every rise. Every rally, I think Yes Bank is a shorting or a sell candidate. Maybe if not shorting, but at least exit the existing positions. I'm sure even in Yes Bank, there are a lot of people stuck at every level from 400, 300, 200 or even 150. Hoping that it's going to bounce back, but I doubt it. My sense is we'll see another 50% erosion in Yes Bank in the next few months.
Okay, Hari, what's your sense? What have you told your clients?
No, I agree with Vivek that this is probably the golden period for short sellers. In fact, if you look at the next probably 9 to 10 months, I think there are going to be immense number of stock-specific short selling opportunities. Maybe the index may still be up, but then huge number of stock selling opportunities. And for me, the top short remains Z. I think I've been short on this stock for a long time. From about 500, I've been short, and I think even at 338, I would still believe that there is a shorting opportunity in the stock, and the reasons are manifold. Number one, I think what I expect is that the way the entire mutual fund story has been panning out, we can expect a very, very rapid clamp down on whatever has been happening as far as holdings are concerned. So I think most of the mutual funds won't have a choice but to give an exit route to all their FMP holders and either dump these Z bonds in the market and then see whatever happens. So I think the Z shares are going to take a real tumble from that point of time. So I would believe that probably even 220, Nifty 200 should not be too far-fetched as far as Z is concerned. And this is one stock extremely vulnerable. We have seen the numbers coming under pressure. I think the new TRI policy has put pressure on all these telecom, all these broadcasting companies. And I think the biggest problem for them is the group investments and what has happened to the FMP. So we continue to be short as far as Z is concerned.
Okay, that's the view that's coming in. Jet Airways, Z are some of the stocks that were discussed in today's trade. Obviously, that's something that probably could go in even lower. But with that, we're completely timed out on today's edition of Hot Money. Many thanks to all of my guests. Vivek, thanks for coming in. Hari, thanks so much for coming in.
You.
Ask BQ comes up next. Stay tuned to Bloomberg Point.